We live in a fantasy world now. Reality has been destroyed.
This is the time that we really need to pay attention.
The probabilities are overwhelmingly on gold's side. That is the best environment to see gold increase its value.
Welcome to Palisade's Gold Radio. I'm your host, Tom Bodrovics. Joining me today is Matthew Pipenburg, partner of Von Greyerz AG. Matt, how are you today?
I'm good, Tom. It's always good to be speaking with you. Looking forward to it as usual.
Absolutely. It's always a pleasure. I cannot say that enough. You're one of my favorite guys to speak to, both on and off recording. You know, you and I share some very, let's say, extreme sport interests. Kind of on different sides of the spectrum. Mine my interests don't burn hay, yours do. Mine don't have a mind of their own, but they can both hurt us equally.
Yes, that's true.
But I'd like to start today's discussion with a quote, and you tell me who wrote it. So the quote says, "The first panacea of a mismanaged nation is inflation of the currency, and the second is war. Both bring a temporary prosperity, both bring a permanent ruin, but both are the refuge of political and economic opportunists." So who wrote that, and why is it so fundamental to this time that we're in?
Well, that's an easy one for me because I use that quote all the time. So anyone who's seen me elsewhere, read some of my stuff, is going to say I'm cheating. But yeah, that's Ernest Hemingway, who's a veteran, who was an ambulance driver in the First World War and a correspondent in the Second World War, and certainly wasn't someone who hadn't seen combat and the effects of war and the horrors of war, kind of a machismo guy. But he certainly also wasn't a central banker and economist. He was a Nobel Prize winning, fiction writer, but a very wise person, flawed person, but very astute. And that quote, I think, couldn't be more universal in history and more timely today, in the sense of, the key words in there are political opportunists, temporary prosperity, permanent ruin, inflation, and war. Those are all words that we hear in the headlines, whatever your political bend, cynicism, optimism, pessimism, what have you. Again, quote another author, Mark Twain, history doesn't repeat itself, but it rhymes. And what we're seeing, I think, is a Hemingway rhyme moment. And it's something that concerns me greatly because, again, without trying to just be cynical, I think we're all a little, wherever we are in Canada, the US, certainly here in Europe, I'm seeing it in the elections here in France and Austria and Germany, a lot of distrust, a lot of skepticism, a lot of polarization. That's universal because there's a lot of financial stress. And there's a lot of disconnect between the real economy and the markets. The DAX is at all-time highs. Germany's in recession. S&P, NASDAQ ripping towards all-time highs. Economy's clearly in a recession, whether the MBER reports or not. And yet, political opportunists, John Mearsheimer calls the Democrats and Republicans Tweedledee and Tweedledum. They're almost the same, two stirrups on the same saddle. Yes, there are clear differences, but they're part of this kind of political industrial complex, which is supported a lot more. We can get into the weeds on that by big government and big corporations, big lobbying, et cetera, and big money. Of course, there's a difference between the Democrats and Republicans, but many could say, in a sense, there's not that much of a difference. There may be a difference between Harris and Trump. We can get into that. But back to the Hemingway quote, what is concerning is when you have a country that's in debt, which Hemingway has seen, and he's seen all over the world, and we've certainly seen it all over the world today. Countries do desperate things. Desperate countries do desperate things. Political opportunists who are more interested in getting reelected than being honest or being blunt or being austere or being accountable will buy temporary prosperity. The easiest way to do that is to debase the money, which is what Nixon did, FDR did. You could say Wilson did when he signed the Fed into law in 1913. You can buy temporary prosperity by taking away a gold chaperone, for example, like we did in 71, which is like taking away a chaperone from a party. Teenagers will party when the parents are gone. Do whatever you want. Take away the gold standard. Spend as much as you want. Print as much as you want to fill the delta. Buy temporary prosperity, because when you take away a gold standard, have unlimited money supply expansion and liquidity, that is inflation, but it goes straight into the risk asset markets, the stock markets. There's a clear correlation to the QE policies post-2008 and the S&P's all-time highs. It's undeniable. So that's the temporary prosperity. You can check that box. Well, then comes the permanent ruin. And the things that Hemingway was talking about with that permanent ruin, which we can go into in more detail, is debasement of the currency. Of course, we're seeing that. We're seeing that right now. Inflation, which is tied. And then the permanent ruin of war. And again, these are hot topics. And again, we can go into each of these verticals separately, but we do have inflation and war right now as headlines. We do see political opportunists everywhere. You can pick your poison, pick your color, but they're everywhere. A lot of platitudes ignoring hard math, which we can get into as well. What bothers me and what scares me, since I was born, America's been in a war, directly or indirect, since Vietnam, my whole lifetime. You can look at the Bush doctrine, what we've done. I know veterans who went to Iraq and said we didn't believe we were there for any good reason. And these are, again, what I call lions being led by donkeys. But I think our policies in the Middle East, our wars in Afghanistan, Syria, Libya, Iraq, direct or indirect, were catastrophic. John Mersheimer would agree. Jeffrey Katz would agree. Palisade would agree. A lot of good State Department officials who were left out in the cold would agree. I think that idea of direct and indirect wars has been a failure. Certainly Afghanistan was a failure in the headlines last year. My concern is, like Hemingway's point, will we continue to beat the war drums? Will we continue to distract a population with that temporary prosperity, then beat them with inflation, blame it on something else, and then distract them even more through war? Because war is a great scapegoat, because you're going to have inflation when you have a war, but you can blame the inflation on the war. You can even have rationing on the war. You can have patriotism in a war if you can convince enough people that the war makes sense. And so war is an extension of politics by another mean, by a famous Prussian military writer named von Clausewitz. But that's true in every jurisdiction, in every war. When your back's against a wall, opportunists can use war as a political tool. I think in a nuclear era, that's a very dangerous use of politics. To me, war is an extension of stupidity by another means, especially in a nuclear era. And I mentioned elsewhere, I was with my daughter a few weeks back, walking along the borders with France and Germany in the Argonne and Metz. We visited some of the cemeteries from the First and Second World War, American cemeteries there. It's an extremely humbling experience when you look at the consequences of that type of policy. Now, you could argue World War I or World War II were good wars, et cetera. I'm not going to get into that, of course. Beating fascism, et cetera, was a noble cause. I think the wars we're looking at today, whether that's in Taiwan or this, in Asia, or whether that's in Ukraine, are highly debatable, not quite the same good wars. But my fear is that we could escalate these wars as a political means. And I think that is something that everyone has their own opinions on. Not here to get into that. Whether you think Zelensky is George Washington 2.0 or a puppet of the CIA, we could spend hours on that, and you're not going to change anyone's mind anyway. The point is, do Americans want to send their sons and daughters to war to expand NATO or not? Is that the choice of Americans, or is that the choice of politicians? Or are the politicians making choices that have nothing to do with what Americans want? And, again, I've talked to veterans. I know a couple Marines, a couple Navy SEALs who did tours in Iraq. They said Halliburton was everywhere, whether it was building infrastructures, canteens. There was a real cynical sense that was not a good war. Again, I don't speak for all veterans or all generals. I certainly I have respect for them all, but many would agree that Cheney's war in Iraq wasn't America's war in Iraq. That's a very debatable, again, point to be made. And it's not what we're getting into, but that idea that we are having decisions made by Raytheon or Northrop Grumman or General Dynamics or Halliburton, as opposed to what the average citizen really believes. American citizens are brave. Men and women will go fight for their country. I'll fight for my country. The question is, what are we fighting for? Is there open debate about that? And going back to your original quote, to make a long answer longer, my concern is, to Hemingway's point, is there a risk in this current environment, with inflation, with debt, with political opportunists everywhere, of using war as an extension of politics, as opposed to a genuinely merit-based decision for the safety and security of American interests? That is not for me to answer. It's something all of us should think about. It certainly should be something more openly discussed and debated. And, but Hemingway, I think, was ringing some familiar bells. And I'm just saying we should be very careful about why we're going to war, who's making the decision, what the consequences are. And given the backdrop of a broken economy and a debt-soaked America and a desperate political DC, could we be so bold or so stupid as to go into war to scapegoat and justify what is already a broken economy, the details of which we should get into? But objectively, empirically, America is very broke today.
Mm-hmm.
And very distracted.
Mm-hmm. Well, that's a great point as well. But
Mhm.
Matt, instead of, let's say, focusing on the personnel, the
Mhm.
people that have kind of been dominoes in this process, do you think
Mhm.
that we got into this situation because of incentives
Yeah.
and the misalignment of the incentives in the system rather than the particular people that you can point to that were part of this process? Because it seems
Oh,
like this
yeah.
is this is something that just has continued over the last, let's just call it 50 years.
No, that's an extremely important point you make, Tom. I mean, follow the incentives, really. What is, again, this sounds sensational. I want to try not to be, and this is an extreme statement. But again, Mussolini, I'm a European American. We all have a sense of the World War II or the 30s and Weimar, but we have a very palpable sense of that here in Europe. We all often talk over tea, coffee, beer, cigarettes, whatever you're doing, wherever you are in Europe, whether you're in Wiesbaden, whether you're in Lyon or in Zurich. We remember some of the catchphrases. And one of the things that Mussolini had always said in Italy, before Franco had a similar version, Hitler had a version of it in Germany. What is fascism? It's the perfect marriage of big government and big corporations. Now, governments and corporations have very different incentives sometimes than the people. That definition of fascism isn't just unique to Mussolini, Franco, and Hitler. All those are extreme examples. And I'm certainly not trying to say that America is completely fascist or that Harris, Biden, or Trump are fascists. That's too easy. Um, but really smart guys like Mike Lofgren, who wrote a great book on the deep state, or John Mersheimer at I think he's at University of Chicago or Columbia. I can't remember. Anyway, very brilliant guys have written about the dark state or the deep state. Not that it's some star chamber in Reston, Virginia, or in Middleburg that sits around with every man and company and every woman at the head of a company, or Raytheon or the military industrial complex or big government or big tech or big pharma have this master plan to rule the world. But they do all have very different but similar incentives, which is to maximize profit for themselves. And if you look at the base layer simplicity, the base layer of following these base layers, whether it's the base layer of money, which are the too big to fail banks, the central banks, the BIS, what are their incentives? What is that power? Controlling the supply and price of money. That's an immense power. What are their incentives there? Are there incentives for the betterment of America or to protect their little nieces and nephews at the smaller banks, the major too big to fail banks? If you look at the history of the Federal Reserve or central banks, as Rothschild said, because Warburg and some of Rothschild's guys were there when we created the Fed, the Warburg Bank and some JP Morgan's bank. If you look without conspiracy theory at how the Fed was created, there's no denying, as Rothschild said, I don't care who's in power, give me control of the money and I control. Right.
Mhm.
So that's a base layer of money that people can make their own decisions on. Look into the history of the Fed, look into the practice of the Fed. What is their motive? Is it employment and inflation, or is it power? Is it a cartel that controls one of the most powerful things in your country, money? The other big base layer is information, media. Well, who really controls media? Is it Comcast, or is it the most brilliant investigative journalists of all time following the First Amendment to protect us from big government? If you look at the data, whether it's Vanguard, State Street, Comcast, the base layer and incentives of media is extremely corporate today. Whatever you think of the media, you can't deny that it's corporate owned and therefore corporate dictated. They have their own incentives. Banks have their own incentives. Big agriculture has different incentives than a small farmer in Peoria, Illinois, or Stevensville, Michigan, or Toledo, Ohio, or outside of Ohio. These farmers are being, monopolized by big government, big corporate agriculture. That should be a problem. Their incentives are going to be different than the average farmer. Certainly, I see it here in France. My neighbors are all farmers and cattlemen. They're being squeezed by larger corporations that have very different incentives. What is the incentives of Raytheon, Northrop Grumman, or General Dynamics, or Halliburton when it comes to military decisions? Are those incentives for them and their bottom line, or for the betterment of America? And that gets to the question, are the incentives aligned with what's best for America, or what's best for the C-suite, for corporations that have immense lobbying power and immense power within the decision-making at the RNC, the DNC, the cabinet, and the Pentagon? And I think what we're seeing here isn't some dark conspiracy of 5 or 6 brilliant individuals with huge balance sheets trying to control the world. We see a concatenation, a chain in Europe and America of very powerful businesses and corporations in different sectors, media, banking, agriculture, pharmacies, information, pharmaceuticals, tech. Certainly see it in tech as well, which is a whole other story, where they have control of the information, control of the flows, control of the influence. Is that democracy? Is that really democracy? Is that really for the best of the nation or for the best of a very powerful few who have huge alignment with government? Again, you could spend hours on that, but those incentives are very different from the man on the street, the true believer in democracy, or the true believer in your Congress and Senate and your White House, or the cynics, whatever you have, whatever side you take, left or right. You have to ask, is your vote, is your leader aligned with incentives that are similar to yours? Regardless of what you can say about Trump, and believe me, I understand a lot of people don't like Trump. I get it. You can be just as cynical about Trump as Harris or Biden. I think we can all agree, and certainly those who favor Trump as the lesser of two evils right now in the U.S., is what does have appeal about him is that he's not from government. He's not a product of that kind of bought and paid for system, of which there are very few heroes. That doesn't justify or suggest you should vote for Trump on that, but that explains some of his appeal. Mm-hmm. What we're seeing in Europe, talk about misaligned incentives, Tom, is, Macron in France has less than 25% of the popular vote, but he stays in power through coalition governments. So the people's choice, the majority voice, isn't happening. Germany, Scholz is not the most popular, but because that left party can or the centrist party can have coalition governments, they still are in power despite the vast majority of the people not following their policies. Certainly you see that where you're sitting in Canada, Tom, with Trudeau. He's only in power through his coalitions, not because the vast majority of Canadians want him in power. Again, I'm not trying to be anti-Trudeau, anti-Scholz, anti-Macron, anti-Harris, or anti-Trump. I'm saying, is the voice of the people, is the incentive of the majority represented in government? And my argument empirically, mathematically, just on percentages, is no, it's not. And regardless of who wins in November, I don't think the incentives are fully aligned with the people on the street. I think the incentives of how corporatized, you could use the extreme term fascist, big government with big corporations are, which I think objectively are undeniable. If you really want to improve your country, re-bring in the Sherman Act, the Clayton Act, antitrust, anti-monopoly powers. I do not understand, as a former law student, how you can have groups like BlackRock, Vanguard, State Street, Amazon, in so much control of a certain market, so much monopoly power. The monopoly power, frankly, of the Fed over money should be reinvestigated. But again, what we have in DC are the regulators who handle whether it's big ag, big pharma, big tech. The regulators are former CEOs and CIOs of big pharma, big tech, et cetera. Bankers get huge bonuses to go work for the SEC after they've cashed out at Morgan Stanley or Goldman Sachs. That's a fact. Again, if you read this and learn this, it's less about left or right and more about big corporations. That may sound sensational, so I invite people to do their own homework on that. And again, I would really highly recommend Lofgren's book or Mearsheimer's book on this. It's not a conspiracy to rule the world. It goes to your original point. Are there incentives of the C-suite and big silos of power align with the man in the street? And my suggestion is there's a lot more psychopathy when you look at the complete dislocation of the middle class and the top 1 or 5 or 10%, the ratios of salaries to median employees. These are empirical numbers that have become more and more and more grotesque because we effectively have two Americas. And we have the working poor, which is the middle class. And then we have a feudalistic group of the top 10%, of which I'm a member, which are lords and masters over a slave population of people trying to get through month to month. I come from the Midwest. I'm from a lower middle class family. I've not forgotten, never will forget what that means for the people on the street. I understand Canadian truck drivers. I understand Michigan farmers. I understand them here in the door done. That's not good capitalism. When you have that much wealth inequality, that much consolidated, concentrated power in bed with government, well, government gives you platitudes and not solutions. And again, whether it's Trump or Harris in the coming election, that's like being the captain of the Titanic after you've hit the iceberg. Neither one of them have an easy solution. I don't know anyone who could. Both of them are going to use advisors from BlackRock. I can assure you of that. Now, again, I'm not trying to say pick one or the other. Again, I'm saying no one can fix it, but which of those people are more aligned with you? That's up to you to decide. I watched some of these speeches, and again, my opinion shouldn't matter, but I listened and I'm going to be honest, I listened to Kamala Harris, probably going to upset half the population or half the people watching this. I really tried to actually understand what her answer was. It was just a lot of adjectives and adverbs, had no meat on the bones, none. Now, people can say the same about Trump, but for me, it's scary to see this junior varsity level of facts, this junior varsity level of math, this junior varsity level of competence. And it bothers me because, again, we can all have different interpretations of facts, but facts are stubborn things. And if we look at our debt levels, if we look at our deficits, if we look at the CBO, the Congressional Budget Office's spending, the fiscal spending, and if we look at what that's doing to our currency and what inflation is doing in a compounding effect to our middle class and our working poor, these are massive problems. They're not even discussed in the debate. They're certainly not discussed in that media, which is controlled by 4 or 5 families and corporations. And they're not even being discussed in our debates. I think the power of a real democracy comes from the people. When the people get informed and ask tougher questions and demand more accountability, and if we can bring back the Clayton and Sherman Acts and break up these robber baron corporations that have way too much influence on the DNC, the RNC, the media, the messaging, then we have a chance. And then we have a chance to be honest about our grotesque, what I call politically opportunistic, to Hemingway's point, grotesquely permanent ruined state of our culture and our economy right now. But again, I'm not running for office. I don't have an easy answer. There is none. But at least, let's stick to the facts. Let's not have lies of omission. Let's talk about the real elephants in the room, which is inflation, which is job losses, which is a real recession, which is currency destruction, which again, we can get into gold and markets and all that, which is important to your listeners. But the larger elephant in the room here, to your point again, are these incentives aligned? Are these incentives aligned? I think you've raised a really important issue, Tom.
Mm-hmm. I would disagree with you on one piece of what you said there, Matt. Mm-hmm. And that's the fact that let's say Harris is playing at a junior varsity level. I don't think that we should discount that she is a lot smarter than she might appear to be, because I don't think you can get to that position in the world by being an idiot. I think it would be a mistake to just assume that this is not a strategic way of playing the game, really. And eventually getting what you want out of this game. You know,
no, that's a very fair point. That's a very fair point. And again, you're absolutely right. And no one, especially a guy with a macroeconomic thinking, should tell anyone who to vote for, what to think. I think whether you vote,
we're not getting into that.
Yeah, but I think you're right. And I also think the key issue for me isn't just IQ. I'm sure she's very smart. She was a district attorney. She went to law school. She took the bar exam. I'm sure everyone who runs is a relatively intelligent person. The question is, this is the famous quote from John Kennedy in his Profiles in Courage. Are you running for yourself? Are you running for the best of the nation? And that's no one can tell you what to think about that. I think there's enough mental competence there. But I think the key driver, I'd almost want someone running for office who doesn't want to be a leader, who has a humility, who just is thinking about the nation. You could take the first 1,500 names in the Boston phone book and put them there, because they're not aligned. They're not bought and paid for. They're not driven by something more than the national interest. Whether Trump, Harris, Biden, or anyone else is fully about the nation first, that is not for me to make a statement on. I don't know. I have my biases, my opinions, but they're irrelevant. And to your point, that's a very fair point.
But I think, going back to, let's say, tells about somebody's personality, if they're a career politician, that immediately raises a red flag to me to understand where their incentives lie. And we can point to the way that lobbyists and lobbies work in the US as being, again, this perversion of incentives. But Matt, I'd like to kind of change direction a little bit by, let's say, thinking about the past and what has led us here. Very often when I have these type of conversations, especially, let's say, offline, kind of debating and trying to understand or piece together how we got to this place, especially, being a younger guy like myself, we can kind of point to this era of gold convertibility, the gold convertibility window that was closed by Nixon. And, I think many of these systems have been brought about by the brokenness of the money, the brokenness of the quote unquote free market. I think if the market was actually able to reward those whose incentives were most aligned for the majority of the population, for the majority of the country, we would have a completely different landscape. So my question to you is actually, if we were still on a gold standard or a gold backing of some sort for many of these currencies in the world, and I don't think we can just focus on the US. Obviously, it is one of the most important, but is there, because of this constraint on government spending, do you think that more competently aligns the incentives for leaders to be far more frugal or far more diligent with how this currency is spent, and what problems do you see with a system like that as well?
Well, it's a really good segue from your last point to this point. What are the incentives? What change things? What could be different? What are, we can get into the economics of how markets move. We can get into the geopolitics. We can get into the philosophy. Again, are you doing this for yourself or for your nation? Are you have a will to power that would make Nietzsche blush, or are you truly altruistic? And you take the example of how did we get here in 1971? We'll take the human example of Nixon in the political context of Vietnam, in the geopolitical context of Vietnam, and in the political context and the financial context of a financial crisis. So you put all that in a blender, his personality, the financial crisis he was looking at, and the geopolitics of the time. And then the human, all too human move about incentives. What could Nixon do in 1970, 1971? He was looking down the barrel of a re-election. This was pre-Watergate. Because I think this is a perfect example of how things went wrong. Because Nixon is a template. He's not many examples of the Nixon example. He was looking down the barrel of a very bad economic forecast. He's running for re-election, personal power. He needs a quick fix. The gold chaperone doesn't allow him to spend more, to do more stimulus, to get more votes, to get more popularity, to stay in power. So what does he do? He takes away that chaperone takes the parents out of the party, so now the kids can do what they want. So now, like a little kid, he can spend or expand the money supply or deficit spend without having to have a gold reservoir to put a limit on how much he can spend or create money to fill that delta. And like every president since Nixon, he is a kid at the frat party with no chaperone. So that leads to extremely poor policy based on a decision by Nixon to do not what's best for his country, but what was best for his reelection. And that is a classic example of how individual egos and political psychopathy, in my opinion, has incentives that are misaligned with what's best for sound money and for the nation. Because if you had kept the gold standard, that would prevent not only Nixon, but any other president from trying to stay in power by buying votes, by deficit spending, because everyone is happy when the credit card is working and you can do whatever you want. I joke, if my son's at a frat party, takes my Amex and goes out and buys kegs, hires some limousines, brings in some, whatever they want to do at a frat, brings it in, puts it on my card. Things are great for him at the frat party. Things are great. He's popular. And he can do that quarter after quarter, semester after semester, year after year, until he gives the bill to all his frat buddies. Then they're not going to like him so much. But if you can keep pushing that bill on to the next party or the next president, and they can continue to use that credit card, things go fine until the bill is due. And when the bill is due, when you go in Nixon's period from, that wasn't even $1 trillion in public debt. Now we're at 35, 36 trillion. So now that bill is here. They've been putting on credit card, one party after the next, one administration after the next, expanding. Pick your flavor, left or right. Every president since Nixon's done the same thing because the chaperone's gone. The deficit spending is full on keg party, full on martinis galore. And the bill just keeps getting postponed and the delta keeps getting bought with money created out of thin air. And what has that done? It has debased our currency. It has created massive wealth inequality. It has put us with our back against a wall where whether we raise rates or lower rates, we're going to have inflation anyway. Inflation is theft. It is an invisible tax. It does hurt the middle class more than the upper class. It hurts everyone, but it particularly hurts the working class. And so exactly because of going from sound money to unsound money. We've gotten more of those political opportunists, going back to Hemingway's point. We've gotten more inflation. We've been at war the whole time, which we can pay for putting on a credit card and extending and pretending into the next administration. And then we always have the political opportunists saying, if we're in a problem, if we're in debt up to our ears at record unsustainable levels that are destroying our currency, polarizing our society, and destroying our unity, we can blame that on COVID. We can blame that on Putin. We can blame that on global warming. In my opinion, it's as simple as we're in debt. Any individual, family, or business that has gone through the stress of not having nearly enough income to pay for what they need, you know what that does to a marriage, what it does to a friendship, what it does to your own personal sense of safety. When you're stressed out financially, you have two choices: take accountability and cut spending, or lie, go into more debt and blame it on somebody else. And our politicians, I'm an equal opportunist cynic. That's why it's easy for me. I can listen to anyone. Yeah, I understand their frustrations. My view is that all of the presidents since Nixon, and this is why Thomas Jefferson and Hamilton fought so much about a central bank, because it poisons the well. Every president since Nixon has done the same thing. Pick your president, whether you like him or not. And I think they'll continue to do the same thing, which is why the end game will be inflationary. Debase the currency, as Hemingway said, as Mark Twain said, as David Hume said, as von Mises said. It's not just me. History is full of these examples. In fact, without exception, we will debase the currency to pay for debt. And the reason we were able to get in this much debt is because we didn't have sound money. We didn't have that chaperone that said, nope, your dollar, you can't create that many dollars unless you have this many ounces of gold at Fort Knox. But now that you take away that chaperone, and by the way, what did Nixon promise us in 1971? That would be a temporary solution over 50 years ago. That was a lie. And that would have no effect on the purchasing power of your dollar. That's an absolute lie, because the dollar has lost 98% of its purchasing power versus a milligram of gold since 1971. So again, that's political opportunism. And I don't think Nixon's any real exception. You can pick, again, your president, you can think none of them have used sound money policies. Not Trump, not Biden, not Obama, not Clinton, none of them. And so to me, that's why I'm equal opportunist cynic. Whoever comes in is in November or January, and certainly in Canada too, but particularly in the U.S., home of the world reserve currency, is the captain of the Titanic being elected after the iceberg's already hit. We're at a point of no return. The only cure is debasement, and ultimately that is inflationary. But that doesn't mean we can't have deflationary cycle in the middle, and we can talk about that. And that doesn't mean that gold only goes up and to the right either. But I'm saying they're all intertwined. Psychology, psychopathy, generosity, altruism, economics, politics, it's all in a blender. It's also deeply tied to history. And unfortunately, if you look at the philosophical questions, the human nature of most politicians, to your point, is usually, sadly, with some incredible exceptions, that's the book Profiles in Courage, but in general, the psychopathy and the psychology of most politicians is what's in it for me. My most important goal is how do I stay elected, not what do I do that's best for my country. And that is a personal opinion I have based on my understanding of history and my read of history. And I think that's another great book, Profiles in Courage. Now, some could say Kennedy was just an opportunist, but I don't agree. But I'm saying he wrote a whole book on senators who were willing to do what was best for their country and not for reelection. We're willing to sacrifice their reelection to do the best thing. You can say whatever you want about Eisenhower, Truman, but they didn't go to war by spending deficits. They had to raise taxes. And you can say whatever about Eisenhower, but he balanced the budget. That was unpopular. You can say whatever you want about Eisenhower, but he was a four-star general who wanted a smaller military, not a bigger military. He's the one who warned us about the military-industrial complex in 1961. And so I'm saying there were, I think, real courage. I think Eisenhower, for my personal bias, was one of the greatest, courageous, selfless presidents. There'll be many who'll disagree. But again, these are biases, but look at the facts. And the facts are we've destroyed our currency since we went off the gold standard. Every elected official in the White House has used that destroyed gold standard as a martini or as a tailwind to get drunker and drunker in debt. And the net result is right now, 2024, we're hitting that tipping point. Markets are all-time highs. The economy is totally disconnected. Politics is getting more polarized. People are stressed. Identity politics is the big thing we're talking about. It's transgender reassignment in prison. That's the headlines. That's what we're talking about. When we have debt to GDP at 125%, we're missing something here. And again, that shouldn't be left or right. And war in the Ukraine or war in Israel or war in Asia shouldn't be left or right. That should be American, Canadian, French, German. That should be a decision for the people. And that should be open to real intelligent debate. Again, not my view, your view, or anyone else's view, but it should be intelligently debated and openly discussed. And we're not seeing that. We have to go to Reddit bubbles, or we have to go to alternative media to have views. Some of those views can be too extreme. They can be hurtful or they can be polarizing. But if you go to MSNBC, Fox News, Tele1, or what we have in Europe, it's mostly propaganda from these corporatized media. That's not giving us wise, objective, two solution, two view opinions. It's usually just one view only. And I think that's causing even more division.
So Matt, I know that this is going to be, let's say an oversimplification, but if we look at what Nixon was facing in the 70s, this horrible market, and his solution was stimulus, which, we know what happened next was the inflation of, let's say, the decade of the 70s, the cyclical type of inflation.
Yep.
Again, oversimplification, but let's just take it as simply as we can. Do we have the tools or the ability to do that same type of fight against inflation now, considering the debt levels and understanding what the debt levels were back then?
Well, that's why that goes again right back to your Hemingway point. Now we're at a point where we don't have any solutions. We're now in the permanent ruin stage, from the temporary prosperity to the permanent ruin of inflation and war. What are all the central banks, from the People's Bank of China, the Swiss National Bank, the ECB, what are they all doing this year? They're cutting rates. Why? Because they couldn't beat the war on inflation. We didn't get to target 2%. We're already caving. We're already cutting rates. Why? Because we can't afford higher rates when we have 35 trillion in debt and we have interest expense on that debt at over over $1 trillion. Because unlike 1971 in the Volcker era, when our debt was well below $1 trillion, you could raise rates to fight inflation. You could raise rates by 18%. We couldn't even get to 6% before everything was broken, because we are in too much debt. We can't pay the interest expense. Powell is never going to be Paul Volcker, because Powell has 35 trillion in debt. Paul Volcker had less than $1 trillion. So even though we had the post-71 inflation from the decoupling, which again, Nixon promised would be temporary and have no effect on the dollar, which was completely untrue when he said it and confirmed by what happened afterwards, at least the Fed had the tools, because they only have two tools: interest rates and money supply. Everything's a nail, everything's a hammer. They just go after each thing. But when you have that permanent ruin, administration after administration, campaign after campaign of going deeper and deeper into debt, blaming on everybody else but yourself, and it goes from 1 trillion when we got past Reagan to 35 trillion under Biden. Again, red or blue, doesn't matter. We've gone from 1 trillion to 35 trillion. What can the Fed do? It can't raise rates any higher because it can't afford its interest rate without printing more money. That's more inflation. That's the fiscal dominance. So what's it doing now? It's throwing in the towel, admitting we lost the war on inflation, and cutting rates. Because they have a choice between saving the U.S. Treasury and saving the U.S. dollar. The U.S. Treasury is our debt instrument. We live on debt. We will sacrifice the currency for supporting the bond market with money created out of thin air to keep Treasury yields compressed. Because if they get too high, interest rates get too high and the party's over. So we will continue this charade at the expense of our currency. Again, that's what von Mises warned. That's what David Hume warned. That's what Hemingway warned. That's what Reinhardt and Rogoff have been saying. That's what I've been saying for 20 years. But that does not mean, by the way, that we won't see the dollar get stronger potentially. It does not mean that gold will only go up. It does not mean that markets won't have a disinflationary moment. It certainly doesn't mean that we won't have a recession. We're going to have a recession, and we probably will have a market mean reversion, which will be temporarily really good for the DXY. I could see it going to 120. I could see gold having a retracement, and I'm a gold person. But again, the end game is going to be, to Hemingway's point, permanent ruin, and we're in it already. We're trapped. What can the Fed do? Raise rates? That's inflationary. Cut rates? That's inflationary. What can they do? What we could do, technically, theoretically, is cut our military budget and our entitlements by 50%. Not likely going to happen. Or, to Hemingway's other point, we could go to war, and whatever inflation we suffer, whatever misery we suffer, a politician who is dishonest will say the reason we're here isn't 30, 40, 50 years of incredibly stupid fiscal and monetary policy. It's this bad guy that we're fighting right now. And pick your spot on the map. It's not our fault. It's a war, folks. Let's come together. Mm-hmm. That's my concern. That's evil to me. That's the extension of politics by another mean, war. And that concerns me. I would rather have someone give us accountability and austerity and speak the truth and have Americans or Canadians support that because they're in it together. The problem is in Canada and America and in Europe, nothing's connected. Everything's divided. No leader's going to get that kind of galvanization, that kind of unity. That's why I'm no fun at a cocktail party. I don't think that's realistic. So I think we're going to see an end game of inflation. I hope not an end game of war. We could see, and I think it's very likely, a disinflationary, deflationary period in the interim where markets could go down, the dollar could go up as a safe haven, gold could even retrace because of the need for liquidity. But we can talk about that. But again, it's not trying to be doom and gloom. Fear is not, wow, people should make decisions. They should make decisions based on facts, based on patterns, based on history. The way I look at history and the patterns and the facts, the data on our debt to GDP, the data on our public debt, the data on our deficit to GDP, the data on our true U6 unemployment, the data on bankruptcies, the data on the rising rates of delinquencies and credit card debt and dislocated middle class is open and obvious to me. Open and obvious. That should not be left or right, pro gold, pro dollar, pro Bitcoin, pro crypto. It shouldn't be that. That should be the base case that we all start with. Then we can pick who we trust to solve the problem or who we don't trust. That's an individual choice. But these facts are omitted from the conversation.
Matt, when we think about, exactly as you're saying, the data here, we've seen the issuance of far more short-term debt over the last 3 years than really ever before. Do you think that this has skewed the structure of the bond market? And what do you think the outcomes are going to be of this?
Yeah, it was one of many tricks we were trying to do to create liquidity, or the Treasury and the Fed were trying to do to keep oil in the engine. Again, without liquidity, without oil, your engine stalls. You know that as a cyclist. You need the oil. You need the engine oil. My horse needs hay. If you don't have hay or you don't have oil, you're going to have a sick horse or a broken machine. And so we didn't want to admit to direct QE, which is just printing money out of thin air, mouse clicking out of the Fed to monetize it. So we went to different things. We used the Treasury General account to try and pull some liquidity into the markets. We used the reverse repo markets to do that. We also, to take pressure off the long end of the yield curve, started issuing more debt from the short end on the 2 years and below on the notes and the bills and not the bonds. That was just looking for one more credit card, whether it's the Visa, the MasterCard, the Amex, to pay the bill. It wasn't a solution. It was time buying. It was more liquidity. Now the yields on the short end of the curve are still, the yield on the 2 year, it's still far less than the Fed funds rate. That's an incredibly dangerous indicator that we're running out of places to put the needle for that debt addiction, to find that liquidity, to find that oil, or to find that hay. And eventually, to my point, and I think Lou Groman's and many others, and even people I speak to on and off the record, inevitably it's going to be QE to the moon or war or both. It's going to be stagflation. There's no way around that. I hope it's not as bad as it was in prior eras, but there's no way around that, in my opinion. But to your point, we've issued IOUs from the short end, 2 year, 1 year and below, from the long end, 10 year and above, from the mid. The truth is the rest of the world objectively doesn't trust the American U.S. Treasury the way it did 5 years ago for a number of reasons. One of which is because we weaponized it against Russia. That was a game changer. It's not a de-dollarization hyperbole. The other reason, in addition to weaponizing the world reserve currency, which should have been neutral, and we've lost trust, is that we're in so much debt that who wants an IOU from a debt-soaked issuer? Who wants to get a return, a coupon that doesn't beat inflation? So if no one else in aggregate is buying our IOUs, we're going to have to buy them ourselves with money created out of thin air, which is inflationary. So again, I don't see any way around that. That is the permanent ruin cycle we're in now until we admit to austerity and until we do something to tighten our belts like any family business or increase our income, our GDP. But again, as David Hume says, when your debt to GDP gets over 100%, your growth rate gets cut by a third. You can't increase your income even with this much debt. It's like having a cannonball tied to your ankle and going swimming. And it's the same thing that we're with the Fed. There's no easy way out now. And so we are now at that permanent ruin point. because of decades of living beyond our means. And again, that has implications on the dollar. That has implications on gold, which is why I've been in it. And that has implications on the guy on the street for whom gold isn't, or silver isn't, or mining stocks, or the markets aren't always an easy opportunity or even a safe alternative for them. So a lot of people are really damned if they do, damned if they don't. They're stuck. And that's concerning. And so when they're upset and they're broke, as they've said, when you stand outside in the rain long enough, you'll get in anyone's car. That's how we get more polarized society. That's how we have more identity politics. That's why we have more polarized political debates now. People are angry, and they're angry throughout history, from the first pitchforks of the French Revolution to the Bolsheviks in 1917 to Castro and Batista. Pick your revolution in South America. Things go wrong when people are angry, and people are angry when they're broke and when they have resentment. And you have resentment when you have wealth inequality like we have today in the US in particular, which is far worse than we have in Europe. That's not good capitalism. That's not good democracy. That's not even good for the upper class to see this much feudalism in America. And, we're seeing it in real time. This isn't even projected. We see that when you walk down the street in 3rd Street Promenade, Pioneer Square, Los Angeles, Seattle, Michigan Ave in Chicago, Park Avenue in New York. You see it. And it's getting worse and worse. And our disunity is getting worse and worse. It's all tied. The psychology, the economy, the geopolitics, and sound money. It's all in a blender.
Mm-hmm. So Matt, as a real student of, let's say, several of these cycles, you've seen lots of these, or a handful of these rate cutting cycles, and you've also studied these systems carefully. What are a couple of the things that you expect to see as part of this rate cutting cycle?
Well, you'll see short-term stimulus, right? As we've seen, I've said even at the beginning of this year, risk on. We didn't even cut rates yet. And I was in Vancouver at the beginning of the year. I said, risk on. Fed is promising rate cuts. The markets are like children. They just go into the candy store. Just promise me some money for chocolate and I'll be happy. Just promising the rate cuts sent markets up in 24. Same thing in 23. And we finally got the rate cuts. What's the PBOC in China doing? Giving rate cuts for stimulus. What has it done? Nothing. What does it do? It buys short-term Pavlovian growth for the markets, wholly disconnected from the economy, which is the same thing we have in China as we have in the US. It does create inflation in the markets. Markets are Pavlovian. You give them lower rates for cheaper borrowing, they will go up. If you raise rates like we did in 2022, markets will go down. In other words, if the central banks are hawkish or dovish, the markets are going to be bearish or bullish. In simplification, China just did a 50 basis rate cut this year as well. Yeah, they're talking about 0.2% growth. But like China, the U.S. has a bank system that's rotting from within. China has massive amounts of RMB loans outstanding and very, very tight cash reserves, just like the U.S. banks. Thomas Hernig, it's not just me saying this, Thomas Hernig, president of the Kansas City Fed, retired, said the same problem in American banks. He's a former FDIC guy. He knows banks. He's far more honest than Jerome Powell. He says, we're just one needle away from a banking crisis. It's the same problem in our U.S. banks as the Chinese banks. A lot of crappy loans that are still out there, quote unquote, on the balance sheet that have really poor collateral, not to mention U.S. Treasury, $600 billion with, that are underwater in real terms, and then trillions in bad loans, mostly commercial real estate. China has a very similar problem. And like China, U.S. banks have very small cash reserves relative to their assets. And so, in their liabilities. That's hard, boring math. Again, too boring to be discussed in debates, left, right, or center. Too boring to really be talked about on Main Street and understood by the media, which is completely ignoring these things. We're fighting about, again, stupid nonsense when we're really just broke. And all Americans, Canadians, Germans, French, should be more concerned about honest accounting and honest money than they are about these other things that divide us, whether it's race, sex, politics, whatever. It's everywhere. I see it. It's a perfect storm. But no, cutting rates just buys you a little bit of stimulus. It's another martini. It's another needle shot. It's another dopamine rush for the markets. And eventually, when we talk about the markets, and this is something that goes to the financial world that we talk about, I'm very concerned now. I think the S&P, I think the NASDAQ will hit all-time highs as we go into the end of this year, based on the momentum and the trades and the technicals that I look at. I think we could see an S&P at 61. We could see a NASDAQ at 23, 24,000. But it's on very low momentum and very low volume. And the fact that NVIDIA has a 3 trillion market cap, 2 trillion of which came this year. The fact that its CIO is signing autographs makes me very concerned. the fact that we have such a narrow market. But if I look at the technicals, the fundamentals, the momentum and the volume, I think we're going to hit a blow off top. And don't ask me when to time it. I don't know. When net income margins go south on these names, and then you're going to see a market mean reversion, which will be very deflationary, which will be very bad for gold and Bitcoin temporarily. But between now and then, they can go much higher. That could be very bad for gold. We can make an argument why it might be different, but I have to be honest, it's a possibility. But this blow off top coming at a time of this much debt, because the only good narrative in the US right now is its stock market, is this unending immortal bubble that we've created through QE and through synthetic forms of liquidity. It's directly tied to the amount of money supply we've created. It's expanded globally by 5x in the last 20 years. Of course, you're going to get inflation in assets, but everything pops throughout history. Don't ask me to time it, what month or day, but I look at the momentum and look at the volume. Look at the net income margins on names like NVIDIA. Look at the big tech ETFs. Look at their balance sheets. Just like Cisco and Lucent in the dot-com bubble, for which I was a lottery ticket winner, which is what gave me the money to have my own opinions and get my velocity speed. I saw that as a hedge fund manager in the dot-com bubble. Wasn't a genius. We all knew it was a bubble. And that bubble peaked and then started to plateau. And when net income at Lucent and Cisco went to 550 billion back in the dot-com bubble. We thought that was incredible. Now we're looking at trillions at Apple and NVIDIA. We've gotten used to that. But when those net income margins, those advantages they had on price and volume, when they lose and those net income margins start to go south, that's when the short starting comes in. That's when the selling comes in. And that's when the markets tank. That's the indicator, the signal I look for. Don't ask me to time it. Look at the math. That's just what I'm saying. And when that happens, that is deflationary. That is disinflationary. Higher for longer interest rates was disinflationary and deflationary. Powell effectively put the middle class in recession to fight inflation because he killed demand. Well, thank you very much, Jerome Powell, if you're a middle class guy working 2 jobs in Ohio. Thank you very much for your policy. That really hurt him far more than it hurt, the investment banker at Goldman Sachs. It just is. So Powell's policies, that's the incentives. The Fed serves what master? Banking and a certain class. Doesn't serve the entire country. Its mandate is not inflation and employment. Its mandate is the U.S. Treasury market and the banks that serve it. So again, this is all tied together. Again, these are my views. Do your own homework. Look at how these base layers of money, these base layers of information, these base layers of power work. These are not surprising things to see.
Matt, as we're discussing this idea of, really ever increasing monetary dilution, especially, as you said, we've lost 98% of the US dollar's purchasing power over the last 50 years. That's an incredible statistic. So does this end up really making the price of everything, basically all of these risk assets like Bitcoin, like the S&P, like gold as well, because of the measuring stick constantly losing purchasing power? Is that, one of the biggest reasons to be invested in many of these different asset classes, just as a, as a thought experiment, not to be, let's say, partial to one particular asset or not?
Yeah, no. And again, I've had this conversation. Well, first of all, the short answer is yes. Short answer is yes. When you debase the currency, when you put this invisible tax, when you have CPI going from 9% to 6% to 3%, that's even assuming we trust the CPI scale. Again, I'm not trying to be tinfoil hatted, but everyone on Wall Street knows that's a bogus indicator. But even if you assume that CPI is accurate, you have to remember that the inflation rate, the CPI inflation rate, is a rate of change, not a price level change. It's compounding. So even in just the last 5 to 6 years, objectively, we've lost 20 to 25% of the purchasing power just on the compounding rate of change of inflation. Hey, it's great that Powell got it from 9% to 3%, assuming you believe that. But again, let's take it at its value. Let's believe the Bureau of Labor Statistics. Even if you take the facts as they're presented to us, you just lost greater than 20% of the purchasing power of your money in the last 4 years. So that $100 bill is now worth 80. Now expand that greater. In other words, that's just the last 4 years. But again, in the last 50 plus years, what the dollar has done versus gold, again, not trying to just pick on gold as the savior, but you can't deny that we have a problem with the purchasing power of fiat money. But what does fiat mean? I tell you so. That's literally what it means. So money is whatever the government tells you so. The reason Bitcoin has gained so much popularity is they don't want to be told by the government what the value of their money is. That's why Bitcoin narrative is really popular. It's basically the gold narrative with a modern digital form. We don't have the time to get into a Bitcoin versus gold debate. Many people I align with, like Larry Lepard and Ronnie Sturfula, understand Bitcoin and are in favor of Bitcoin. I personally am not, but that doesn't mean I'm right. But all of us agree that gold is a solution. And again, a Bitcoin discussion requires hours more time and far more expertise than I can give it in 5 minutes. But I could be wrong on Bitcoin. I have no problem with that. I could be wrong. I'm not here to say I know all the answers. I have concerns of whether it's a true store of value. I personally think it's a speculation exit. The way I look at it, the way I chart it, it looks like the triple Q levered. It looks like the NASDAQ triple X levered. It moves like a tech stock. Will it eventually be a store of value? That's not for me to decide. That's for each investor to decide on their own. And there's nothing wrong, by the way, with speculation. But hard assets, to your question, are rising in interest because paper money, what the government tells us is money, isn't trusted the same. It's certainly not even the US dollar. And again, I don't look at comparing Bitcoin to the US dollar or gold to the US dollar or NVIDIA to gold. I don't look at gold as an investment. Bitcoin has massively outperformed on an annualized basis gold, 66% versus like, I don't know, 12, 9%, depending on what window you pick. Of course, Bitcoin has outperformed gold. So has NVIDIA. Gold has outperformed the S&P in the last 24 years, but I don't care because what I look at, I don't look at gold as an investment. It's a store of value. It is insurance against dying paper money. That's it. It can outperform in a high inflation or a low inflation, and a high rate or a low rate, or a strong or a weak dollar. You can pick your statistical and you can find anything you want, pro or con on gold. But the bottom line is this: it holds its purchasing power better than fiat money in general and the US dollar in particular. And again, you take a shoebox of 250 ounces of gold in 1920, you can buy a house with that. The same thing is true today in 2024. Those same ounces of gold will buy a house. But the average house in 1920 was $5,000. Today it's $500,000. But $5,000 in 1920, if you put that in a shoebox, wouldn't buy you anything for a house today in the US. I'm just saying those same gold coins, they do nothing but hold their value, while fiat money is very busy losing its value. So I don't think gold is a pet rock. I don't think hard assets are an archaic relic. And I don't think real money is digital or paper. I think it has properties from the periodic table of the elements. I think it's been there for millennium. It'll be here for millennium now. What happens with Bitcoin or cryptos, I'm not here to tell or make fun of anyone. And even the guys who I respect in the space, we all agree on gold. And even Brent Johnson, I don't think the DXY is going to 150. He could be right, but we all agree on gold. The point is, gold is not an investment, it's an insurance policy. And yes, it does matter when you buy in, what your entry points are on Bitcoin in particular. It matters a lot. You could say it matters whether you bought gold at 300 or 2,700. Of course it matters, especially if you're speculating. But if you're buying gold to ensure your purchasing power and you're in it for the long game, not 2 quarters, 2 tweet cycles, or 2 years, but for the next 30 years as a legacy for your family and for protecting your wealth, not all of your money is going to gold. But if you want insurance on your house or your health or your car, you're hoping your car and your house and your health last for decades, but you still need the insurance. And I look at gold as insurance for dying money, openly dying money, based on math, based on history, based on politics, and based on central bank monetary policies. And so, again, it's not a gold bug argument anymore to understand gold. It doesn't mean gold goes up in a straight line. It doesn't mean it's the only thing you should buy. It doesn't mean that every gold bug needs to sell fear to get you into the game. I was in the risk asset space. I was in the bond space my whole career, and I figured out gold much later. I had to learn. And by the way, gold lost 28% in 2013. It lost 12% in 2015. It doesn't go in a straight line. It could pull back or it could keep going higher. I think the long-term game is much, much higher as we get into much higher inflation. But if you're a speculator, you got to look at it differently. If you're an investor, not even an investor, but an insurer of your fiat money, gold is a no-brainer to me. I'm almost worried that I have too much conviction on gold. But again, whoever I debate or discuss this with or have different opinions on, whether it's the Bitcoin crowd, which I have a lot of respect for the narrative, whether it's the strong dollar crowd, I have a lot of respect for Brent Johnson. We all agree that gold is a part of the solution. In terms of larger commodities in general, and silver we get into, or other hard assets, of course, when there's a commodity super cycle, it's when the S&P and the equity cycle ends. And they go about 12, 13 years at a time. The equity cycle has been kept alive by this money printing and low rates. And then, that's lasted longer, but eventually you're going to have a super cycle. The problem with the super cycle argument in hard assets like commodities is if you have a recession in the meantime, well, that's a massive lack of demand right now. There'll be a lack of demand. So then you have to go through a period of austerity and pain before that super cycle really kicks in. But if you're a long-term player, you want to buy cheap. And right now, in general, commodities are cheap. And compared to the broad money supply, gold is as cheap today as it was in 1971. But people are afraid to walk into gold at all-time highs. I understand that. But if you're going to buy gold for the next 30 years, I think if you buy it at 2,800, 2,200, or 3,200, you're not going to care 20, 30 years from now. But I understand, depending on what your profile, what your need is, and there are many who have argued that gold's going to retrace by 30% like it did in '08 because people need cash and liquidity. And if markets mean revert south, that gold's going to get hammered. Fair point, very fair point. My opinion is this is not going to be like 2008. Gold is not going to act like it did in 2008 for a lot of reasons, but largely because of the massive changes in the gold market, the massive new status of gold as a tier one asset, and the central bank purchasing of gold. But that doesn't mean I'm completely right on that. I don't know exactly what gold will do in the next market mean reversion. There are smart guys who think it'll go down. Of course, I'm invested to say it won't go down that much, but it could, certainly could. But long-term play, it's irrelevant to me. It's irrelevant to me.
So Matt, just to, I guess, address that a little bit more, what are some of the mechanisms that could cause a real drawdown in the gold price? And let's address silver as well, because I think, it kind of, it's almost like a chameleon a lot of times. It kind of switches back and forth between this industrial and also monetary and or investment type of property. So why... What are the mechanisms that really play into that cyclicality within the metals market?
Well, let's answer your question by saying, well, gold will go up and what could make it go down? What will make gold go up longer term to me is now undeniable. And that's just the simplest answer is gold's going to go up because fiat money is going to continue to lose its purchasing power. That's the simplest answer. When you see the BIS giving gold tier one asset status, that's because central banks in the world are getting tired of being the dog wagged by the tail of the US dollar. They don't trust the US Treasury. So you're seeing that BIS tier one status is extremely politically and financially important indicator. I think the BRICS going 45 nations outside of the gold or outside of the US dollar in trades is to some a small example. I think it's just a trending bigger example. I think the fact that you're net settling in the BRICS in gold outside the US Treasury US dollar is massive. I think that the oil trade, not petrodollar ending overnight, but already we're seeing massive dislocations in the oil trade outside of the US dollar. China buying oil from Russia, paying for that in yuan, and Russia converting the difference in gold. These are undeniable factors. The fact that even the IMF is talking about this hateful thing called central bank digital currency, which I hate, but even they are admitting that for it to have credibility, it has to be partially covered in gold. So all these things long-term are very strong indicators that gold is going up because paper money is less trusted and going down. Now, to your question of, and I'll get to silver, what could make gold down? Absolutely. If we see a massive bust in the S&P and the NASDAQ and the Dow or the DAX, you see a huge mean reversion, a historical mean reversion in the markets like we saw in 2008 or 2001, that you could make the comparison that just like in '08, gold will be used as the sound way to get liquidity because all your other assets are bleeding. You need to make margin. You need liquidity. You're going to sell your good assets to cover your losses, and therefore gold could go down. But again, the backdrop geopolitically, the backdrop with central banks, the backdrop of gold as a tier one asset, in my opinion, the next market crash will not do to gold what it did in 2008. Others will say, Matt, you have a vested interest in saying that because you're in the gold business. So you got to look at that argument. Heinrich Zeyberg makes a very strong case for that. I'll see him in Frankfurt in November. We're both keynoting. I'm very eager to talk to him about that. My bias and my opinion is he could be right, but I think it's a very different world in 2024 than it is in 2008. And just comparing a market mean reversion to 2008 is a little too simple, but he could be right. I'm just saying that for people to make their own decisions. In terms of silver, well, of course, if gold is going to go higher, eventually silver will too. And by the way, if gold goes down, to his point, in a big market mean reversion, silver will go down. Because when gold lost 35% in '08, silver lost 60%. So that's the bear case for gold and silver. I got to play it so people can look at that. The bull case for silver is, come on, there's a massive supply and demand mismatch right now in the silver space. Huge. And I think I mean, we're at 4-year supply deficits right now in the silver space, not just what's going on in the COMEX markets, the amount of money taken off the COMEX. It's not even there to be levered and price fixed. But I mean, the big answers are you've got this massive problem with supply. I mean, you're not even there's in Africa, you've had like, I think there was like, I don't know, 9 or 12 military coups in the last 5 years where some of these geopolitical risks were extracting silver because it's usually there are no open pit silver mines even in Latin America or Africa right now. It's usually a derivative of, other metals. I think it's, copper, lead, and zinc and others, but there's not real direct open silver producing mines that are exclusively the silver. But you've got this problem geopolitically, and in Latin America, you've got nationalization. I think I'm looking at the Peru and Mexico. I think they have less projects, not more. So when you look at Latin America and Africa, where some of these derivatives and mine sources are for silver, the supply is just tightening. Meanwhile, you're getting much bigger demand from India and China. And certainly even from the what do you call it, the solar panel industry. That mismatch of tightening 4-year supply restrictions, COMEX dislocation, and increased demand should be sending silver higher. And the other thing is, if gold is hitting all-time highs, well, usually then silver has its golden moments. And I think we haven't seen those golden moments like we did in 1980 or 2011 with silver. I think it's just a matter of time. When you see the gold silver ratio go from 125 to 75 to probably 40s, well, again, that means silver is going to be $200-$300 minimal. The problem is, and Ronnie Sturfler would agree, and I talked to him about this earlier in the year, mining in general, and certainly silver in particular, is breaking a lot of hearts. Although silver's had a good run this year, it's still breaking a lot of hearts. And to Rick Rule's point, if you're a silver investor for the long term, then you have to have extraordinary patience, but you're going to get extravagantly rewarded. I think some people are tired of hearing that. They want that reward now. They've been beaten down, especially by the mining space. But I think a couple of things on the mining space, we've talked about, mining is breaking hearts more than the silver price. Silver's done relatively well this year. There's a slowdown in mining capital. That's the bottom line. And anyone who's in the mining space, and I'm not an expert on mining, it's extreme speculation with massive risk reward for those who are savvy in the space. But you have to have good management. You have to have good capital. There's not a lot of capital flowing into silver production right now in the right jurisdictions. There are some good mines, but the other thing, as everyone in the mining space knows, the key is the cost of production has to be less than the spot price, right? When the spot price of silver gets higher and the cost of production is lower, you've got a great opportunity, a great delta. The irony is because there is this mismatch in silver supply, that the spot price, just by the lower and lower supply, is eventually going to get higher, which means the cost of production will be less than the spot price. You're going to start seeing more supply come in. And you're already seeing in the derivative mining plays with silver. When silver goes from 23 to 30, what that does to the free cash flow of these mines is extraordinary. And yet the equities in the silver mining space still haven't mended the broken hearts of people who've been in this game for decades. And so there's a lot at play, but just in the golden moment optionality, that little speedboat that is silver next to that juggernaut that is gold, as gold is hitting all-time highs in the US dollar, it's not at all unusual to expect that gold-silver ratio to compress and for silver to break out even more, well above 50. And eventually when those ratios go from the 70s into the 40s, you're talking $200 or $300 silver. But again, if we have a recession in the interim, if we have a market mean reversion, that price could be very volatile. It doesn't go in a straight line. Not even gold. I love gold, but it doesn't go in a straight line. But you have to ask yourself, why are you buying gold and silver? What's your motive? If it's to speculate or arbitrage, that's very different. If it's as insurance, if it's sounder money than paper money, then you're going to be more patient and more conviction based on your investments, and you're going to be less worried about timing that window. But entry windows matter for everyone. But again, 20 years from now, I can't imagine gold's going to be less than 2,700. It's certainly going to be more. But the problem is, what's a loaf of bread or the cost of a new tire for your bike? What's that going to cost 20 years from now? I don't look at gold or silver as a way to get rich. I look at it as a way to stay rich. So it's a very different motive from speculating in mining or speculating in NVIDIA or speculating on the NASDAQ or the Dow or the S&P. I do not mock speculation, but understand why you should buy gold. To me, gold is not an investment. It's a store of value. And that's not sexy to a lot of people. I understand. Be very careful treading lightly into the Nvidia trade or that tech trade. I've seen that movie before. Watch those net income margins. If you think a rising S&P is immortal and that's your best hedge against inflation, be careful. That's just my advice. I've seen that movie before too. And this market looks a lot like the Cisco market of the early 2000s. It really does.
Matt, I'd kind of like to wrap on this idea of that we did kind of already touch on, which is this idea of a gold backing in some ways. Do you think that countries like China and Russia, because they're buying so much gold, that they're going back to this gold backing of their currency, or can we as individuals also kind of go back to this idea of a gold backed currency, or a gold safety net in a lot of ways for our own personal banks?
I think I've said many times that Russia and China, whatever you think of them, and I have no interest in living in Shanghai or St. Petersburg. I'm not pro-Russia or pro-China, but they're not stupid. I don't think it was ever a plan B to come up with Babokov or Glassiev or a BRICS alternative currency. I think it was a plan A all along. They are playing chess while the West plays checkers. They're two cultures and countries accustomed to austerity and suffering and centralized control. They watch the West with some envy for its decadence and its fun, its temporary prosperity. But their long game is they know that America's going to shoot itself in the foot with its debt, that they're in a debt spiral. Now, I'm not saying China or Russia are perfect examples of a centralized economy. Look at China's problems. But I'm saying in terms of currencies, we live in a nuclear era where I don't think ballistic missiles are going to solve problems, but we can have currency wars, and we can fight with currencies. We can cooperate with currencies. We can have détente with currencies. But I think the sanctioning of Russia during the Ukraine war, early 2022, gave Russia and China the pretext they've been looking for decades, which was a reason to officially distrust the U.S. Treasury and the U.S. government. Because when you freeze the FX reserves of a major nuclear power like Russia, when you take away their hundreds of billions in U.S. Treasuries, that's effectively a default. You're taking it away. That's a default. Now, you can say it's politically justified. I'm not here to say that's right or wrong. But the rest of the world, not just China and Russia, and certainly not just Russia, but Turkey, other countries, Latin American countries, Brazil. Well, if they can do that to Russia, they can do that to us. We need the dollar for liquidity. It can't go away. We're not going to replace the U.S. dollar. It has the best bond market. It has the best swaps, options, structure. There's nothing like it in the world. So the U.S. dollar, I think, will stay the world reserve currency. I think it'll be repriced. What China and Russia and the BRICS are doing, and there's much debate whether they'll get a gold-backed BRICS currency. Like Rick Rule, I don't think any country wants to give up its sovereignty or its national currency to a gold-backed BRICS currency redeemable, say, in Russia or Shanghai. I think what they'll do is either two things. Most simply, they'll just trade in their own currencies and they'll swap the delta with physical gold. In other words, gold becomes a net settlement currency because India, Brazil, China, and Russia want to reserve the right to do what America does every day, debase their currency to pay for their debt. But in the meantime, when it comes to trade, they can net settle in local currencies. They can trade in local currencies and net settle the delta at the current swap with gold. Is the example that Russia does when they buy, when they sell oil to China and China gives them yuan. Russia takes that yuan, buys a lot of Chinese products that were once made in America, and whatever the delta is on the currency, they use it. They pay for that in physical gold, which they take on the Shanghai exchange. In other words, gold can become a net settlement asset, and you can always get your liquidity in local currencies, including the U.S. dollar, which will still be king for liquidity. But I don't think you need a gold-backed BRICS currency or a gold-backed U.S. dollar. But with the U.S. dollar example, there was this famous Cross of Gold speech by William Jennings Bryan. I think it was in the early 1900s. Where he made a case that if you have a gold-backed dollar, it's the same case Nixon would make, that I can't get, that'll destroy the poor and the middle class because there won't be enough credit availability. Banks won't have enough gold to extend credit, and so that will just create a massive deflation, and then it'll hurt the poor even more. So, there's arguments that even if you had sound money, would there be enough credit? Well, not the kind of credit we're used to, and not the kind of credit that just benefits a small minority of banks and banking clients. So it gets very wonky. The short answer is we need sounder money. We need some partial coverage. We need some chaperone. I think that will be politically difficult. We'll probably see, and I'm just speculating, if we don't have war, we're going to see a major market mean reversion. We're going to see central banks around the world printing money to the moon. And then we're going to have a Plaza Accord, Bretton Woods 2.0, where we're going to probably see centralized digital currency, whether we like it or not, central bank digital currency, digital dollars, digital euros, partially covered in gold. And then you'll get sounder money, but no privacy. And as always, governments will use a crisis as an opportunity to have more control over the individual citizens. And they'll probably have somebody to blame it on other than themselves. That's where, again, I'm saying we're in this trap of opportunistic and more centralization, because debt always leads to more centralization, left or right. And I see that happening. I don't see a fully gold-backed dollar. We'll probably have some type of global monetary reset with the IMF and the BIS and the central banks of the world that are already tilting this way towards a central bank digital currency, which will have a partial gold coverage to it, but it'll be less privacy, less civil liberties, and less fair money. But that's where we're headed. I don't have an easy answer, but I do think we're going to see some blow-off tops, some real pain, probably after the election. And then we're going to see, hopefully not war, but a lot of money printing, a lot of currency debasement, and then eventually gold and other assets will rise, anti-fiat assets will rise. I think during that deflation period, we can see the DXY go higher, but the end game is inflationary, and then it gets political. And that political could either be CBDC or it could be war. It could be both. Hopefully it's just one or the other. And hopefully it's not revolution and social unrest and pitchforks, because that doesn't do anything either. Mm-hmm. But I don't know. The truth is, I don't know. I just know there's no easy solution now. We're way past the Rubicon of an easy answer now. Way past that. I have no idea exactly how it plays out. I just hope it's not war. I hope it's not more war. That's all.
Well, I couldn't agree with you more, Matt. And I think one of the most important pieces of that puzzle is just to understand what we're facing and to take the time to try to do it objectively as well, instead of, being partisan, being, for one particular party or the other. We've discussed today to try to be more objective and understand that the road we're on is not, one person's fault or one person's doing. It is a system that has, let's say, perverted incentives that has led us here, and trying to understand that for what it is gives us the ability to assess it and try to find the best way to protect ourselves through that chaos. And I agree. I hope that it's not, hot and nuclear war that ends up leading to the killing and the suffering of millions of people, if not billions. But again, trying to be optimistic while being realistic, right?
Yeah, I mean, that to me is madness. I don't see how that's a real strategic option, but I'm not a military expert. I'm sure there's somebody at some military academy who can say that there's a strategic case for tactical nuclear weapons. I don't know. But I think, to your point, democracy is not just about one or two great leaders, left, right, or center. Democracy is about the people. And our founding fathers, in the U.S. at least in particular, from the Enlightenment that came from Europe that spread to Canada and other parts of America, the principles of a democracy are the people making decisions based on information and education, not on emotion and not on a cult of leadership, left, right, or center. And I think if it's Pollyannish or as wonky as it sounds, the more people get informed without becoming divided, because war, inflation, poverty, these are not left or right ideologies. These are American, Canadian, French. These are democratic ideas. These are concerns. We want to avoid war. We want to avoid inflation. We want to have equality of opportunity. And so that should not be left or right. That should be democratic. And then you can pick who you think is best going to promote that. But I hope that if we can become more informed, we'll ask harder questions, demand blunter answers, and demand harder solutions. That is wishful thinking, probably, because that requires a lot of people to separate their emotions and start looking at facts. They can look at my facts and have different reactions. Or anyway, the facts are objective. You can take a left, right, or a right view, a left view. That's up to you. But I think what's sad to me is not even the facts are out there. Not even that base layer is out there yet. and not even that base layer of understanding how major corporations have greatly influenced our foreign and domestic and information policies, how our First Amendment, how our Bill of Rights have been truncated by corporate interests, how the Patriot Act is not necessarily patriotic. In other words, how the Department of Homeland Security is necessarily security for our civil liberties and the 10 amendments to our Constitution and the Bill of Rights. That should not be left or right. That should be democratic. And the more citizens in these countries are aware of their rights, whether it's the Magna Carta, the Constitution, the Declaration of the Rights of Man, the more you're aware of these fundamental rights, the less divided we should be about party and the more unified we should be about the ideology of a democracy. And as Churchill said, democracies are messy, but they're better than any other alternative. Mm-hmm. And so, yeah, you don't always get what you want in a democracy, but we should at least trust that it's working and let the majority supposedly rule. Others would argue, well, that's mob rule. There are many who say Larry Fink doesn't want democracy, that Trudeau doesn't want democracy because it gets in the way of profit. It's easier to be centralized. Oligarchies work better. Well, that's a whole other story, and I don't think that's true. But democracy is messy. It requires, as Jefferson and Thomas Paine said, education, not emotion. A look at the facts, a fair explanation of the facts, a fair laying out of the facts. There shouldn't be confidential files, whether it's the JFK assassination or COVID or Big Pharma. There should be no sealed files in a democracy. Everything should be out there. We should have open debate like Gore Vidal and William Buckley. There should be brilliant debate from all sides, and nothing should be censored if it's meant to try and inform the people. And what we're seeing in the last 5 to 6 years is the opposite of that.
Mm-hmm. Well, Matt, I couldn't say that any better myself. I think that's a great point to wrap up on today.
Yeah.
Is there anything else that you would like to leave our listeners with to think about?
God, we've been talking for an hour and a half, so I think they're probably sick of it if they've made it this far. No, again, don't abandon your own judgment. Get informed on your own. Don't take Brent Johnson, Matt Pipenburg, Jim Rickards, Rick Rule, Ronnie Sturfula, Egon von Greyerz, whether it's gold, Bitcoin, anything. Don't just take a YouTube video's word for it. Read some critical thinking on both sides of a case that you believe in, whatever the issue. Get informed. When there's power in information. There's power in knowledge. That can't be taken from you. That's not foreclosable. That's not stealable. That's yours. And be curious. Be more than just angry. I think there's way too much anger. I see it everywhere I go right now. You can hardly have a dinner conversation without upsetting someone. You can hardly have a conversation in your own family. I think we should get past politics and ideology and talk to core principles. And most importantly, get informed rather than just take the opinion of one or two people and stick to it on any issue. You know, have your own opinions, but make them informed.
Well, I appreciate you being part of the conversation today, Matt. Of course, for anybody that wants to read more of Matt's articles, you pen some very interesting and well-written articles, all available at vg.gold. Of course, everything from you and Egon, all available there. Matt, I really want to thank you for your time today and always appreciate getting to speak with you.
Well, thank you, Tom, and thanks to the audience for putting up with us for so long. It was a good conversation.
Absolutely. Well, I know you have some very, very dedicated fans, and I think rightfully so. So I appreciate it.
Thanks, Tom.
This podcast is for general informational purposes only. Nothing on this podcast should be taken as investment advice. Guests on this show are not compensated for their appearance. Listeners are urged to educate themselves and make their own decisions. Do not base any investment decisions on the information contained. To view our full disclaimer, please visit our website.